Awesome. So we're back live here with the Independent Investor Channel. If you'd be so kind as to give me a thumbs up if you guys are audio checking for me. I see some of the more devoted followers of the channel, folks that have been with me for quite some time. I'm going to give it a little bit of a few moments for people to make their way into the live stream. I do this for a very simple reason. We provide visibility on the channel. All good. Thank you so much. Thank you for the questions before as well. You guys know I typically turn this on and allow you guys to drop some comments, some topics into the live stream. For you guys that kind of keep up with the pulse of the channel, I want to thank everybody for kind of kicking over and following a little bit on Instagram. I really enjoy that. I really insist upon you guys kind of knowing where I come from, why I do the channel. So for you guys that maybe are making their way into the live stream for the first time, I want to welcome everybody. The subscriber base of the channel has continued to improve. I'm very proud and humbled by that. I think each and every one of the folks that are making their way into the channel have the real potential of implementing some of this great information that we're putting through in way of testimonial. I know a lot of people are aware of the prospects, but there's a lot of people that are not. And they just need that opportunity for somebody like myself who offers a testimonial probably a little bit more aggressively than most, putting 300 videos out through YouTube to try to share my message with kind folks that are making their way in. And looking to kind of enrich their own lives by maybe investing a little bit, maybe changing their strategy a little bit. That can be sometimes one of the most important things to do. I've got 5 minutes a day on the board here, and that really speaks volumes to folks that maybe you're going along the same routine for years or decades. And maybe they're not moving quickly as they want up in the financial security realm. And a lot of people I find don't really put a whole lot of thought into this topic. And if you're kind of stuck in a rut and you're making your way into my channel, I do not profess to have all the answers. As a matter of fact, that's a lot of the reason why a lot of the folks will tune into the channel, because they can relate with the fact that I do not put food on the table with YouTube. I do not do that. Okay? I do this on my own accord. I do it at my pace. I do not do this for my own self-enrichment. Other than that, if the channel were just to explode and go viral, I would accept that as well. But you guys that have been with me for a while, you guys know I'm the same ornery cuss that I've been for the last 3 years on the channel, and really have felt motivated to come on and provide a lot of good information. I just had somebody come into the channel just this week who's 16 years old and was like, man, I'm so glad I found your channel. And that right there gives me chills. It really does, because I tell you what, if I had this information when I was young, and we need to do a better job of preparing our younger generation to empower themselves. Don't rely on anybody other than themselves for that empowerment. And if I'm the one to open that door and maybe bridge the gap to that empowerment, then so be it. As you guys can tell, I'm fairly fired up. Certainly just missed the heck out of coming on and doing my live stream, but I took a well-deserved break away from the channel. And I treat this channel the exact same way I approach my investing philosophy, okay? Investing doesn't have to be a 24-hour-a-day, 7-day-a-week thing. I'm going to talk a lot about some misconceptions a little bit later on in the live stream. I'm looking to have this to be a real robust, probably couple-hour live stream. Just like usual, we'll run this usual, but certainly want to open up the opportunity for anybody that's making their way into the channel, maybe for the first time. And they're trying to understand why they're catching a financial piece through YouTube. Now, make no mistake, there can be a lot of misleading information out there, okay? There can be misleading information that you can trip, fall, and succeed at, okay? What we're trying to do is provide real information for people, different strategies to approach the stock market in a multiple different ways, because the stock market is Very, very powerful. It's very, very humbling. Okay. If you approach it as if it's a game, you're probably going to get burnt and you're going to learn a lesson. Now, there are inherent benefits to learning those lessons through experience in the stock market. But if you're one of those folks that don't have any exposure at all to the stock market, or when you came to the channel, you didn't have any exposure to the stock market, and by nature of coming through, maybe we've bridged a few gaps and answered some of those questions, and you've entered into the stock market within the last 3 years, ask yourself rhetorically, what has it meant for you? Have you been critical of your own program? Have you identified things that maybe you can improve upon yourself? Are there things that maybe you would have done different, right? Those are all lessons that you learn through the course of an investor's life. And you don't really get that experience unless you become an investor yourself, unless you take that leap and enter into the stock market and accept your exposure in a way that gets you the proper level of exposure to the stock market that's in line with your comfort, okay? Because I do contend that there's a lot of people working up toward their fitness to just have the luxury or opportunity to enter into the stock market, all right? Not everybody's like Doug Whitaker, man, who really leverages his opportunity, and there's an infinite number of ways to make money in the stock market. There really are. And I do contend that if you were to give 10 people a scenario in the stock market where you give them the exact same amount of money and you give them the exact equity to buy, you would probably come out with 10 different outcomes. Okay. And there's a reason for that. It's because once that is put into motion, and typically people think that they need to either overmanage that account or finagle with it too often. And it typically results in underperformance when you compare it to the stock market. So when we take a step back, we look at the stock market in a lot of different ways. How can we approach the market in a way to give us the best opportunity and the safest opportunity for a realistic rate of return? Okay. If you get, promises through social media of overnight success and wealth, if you're promised that by nature of taking a certain course that you're going to fall into success, I'm not one of those advocates of that. I'm really a lot more old school than that. I really do believe that hard work can pay off. I don't really consider investing hard work. It takes a few attributes. It takes your ability to eliminate emotion, if this is something that you want to get involved with in some form or fashion. Now, your exposure limit doesn't have to be that you take your entire life savings and put it into the stock market. That's not what we're talking about here. And I think a lot of people, when they don't know a lot about the market or they're reluctant, but they know the importance of investing, a lot of people want to gravitate towards somebody who seemingly knows a lot about the stock market, okay? And I'm a little bit different in that I believe that we all go and progress through life. And I've got a little secret for you. None of us have all the answers. None of us, okay? None of us have all the answers. And that's really a lot of the reason why I run the live stream on Fridays, to provide that opportunity, because as a community of folks that are looking to empower ourselves, okay, I had a really interesting comment come through this week as well, talking about, I made a comment just off the cuff about fighting the system a little bit, okay? And I don't mean this as an anarchist. What I mean this as a realist, all right? When you go to Walmart, you're always being sold on products. You're paying retail for everything you buy. When you go and buy a car from the auto dealership, you're always being sold on something. Whenever you buy insurance, whenever you buy a home, okay, a home is a great example. When you're being sold by a realtor and you pay $250,000, but over the course of 30 years, you end up paying $500,000. You've just been sold, okay? That is the society that we live in. And there's very few opportunities, in my particular opinion, to kind of fight back a little bit, okay? Put a few chips on your side. Put a little bit of a strategic advantage on your side. So for you guys, again, that are kind of making your way in, you're fairly new to the channel, please understand I don't wave magic wands for you. I do not expect at all that you're going to come into the Independent Investor channel and I say and you do and therefore render success. I'm a lot more realistic than that. I think over time we will evolve together. And for the folks that have been with me for quite some time, I think the results would probably speak for themselves. I don't get to make that assessment. The subscribers and the folks that benefit from the information and are part of the community and part of supporting the message for themselves, not me, okay? The whole idea here is that we're talking about concepts that empower individuals in smaller scale or larger scale. If you're young or you're old, okay? The idea is that this is applicable to all people. And I find it extremely ironic where information comes through social media and it's a one size fits all. Buy these 5 stocks and you'll succeed in the stock market. No acknowledgement to tax protection, no acknowledgement to the reduction or elimination of fees, no acknowledgement whatsoever that you need to get your budget in check, no acknowledgement whatsoever on your spending habits, okay? You have to get all those things in line to make the other stuff make sense, okay? And that's why I talk about not coming on here and providing a false sense of security for viewers. I try to really keep it on the ground level. Thank you so much for making your way in on Friday. Appreciate the leave of absence from the channel. I did really miss it. I really enjoy this for you guys. I see I've got a heck of a group in here. All right. And for that, I thank you. I really do. The power of this channel resides with you guys. It really does. It's just I'm the spearheader of the message, and that's just the way of it. That's totally fine. I've had a few folks ask me, I've got some really cool, I recognize Renee Rodriguez who's popped in here. I'll get to your question. Certainly, I really appreciate that. But for you guys that are fairly new to the channel, please do not hesitate because I will walk through each of these questions, comments, and try to add my little bit of twist, and hopefully we can facilitate a discussion. I do have my friend in here, financial investor, who is also a channel creator, one of the most, if not the top loyal follower of the channel, and I support his endeavors as well just as much. Thank you, Brent, for making your way in as well, and the financial investor. I did see one other channel creator. I'm sure there will be more pop in, and I will acknowledge those folks as they're making their way in. Guys, this got a lot of folks from a lot of around the world, okay? A lot of folks here based in the US. But what this tells me is that people are interested in putting more of an emphasis on their finances. That's what it tells me, okay? Now, I'm not the best degree of that interest because the stock market is something that I do spend a lot of time on just because it's one of my favorite topics. It's one of my favorite hobbies. It's one of those things that if you thought that I was a little bit off, I enjoy growing wealth for the sheer sake of growing wealth. It's not necessarily about the money for me. It's about implementing a plan and seeing that plan follow through and work, okay? And the stock market is one of those rare places that allows you to do that if, in fact, you are willing to separate what it is you may think you know about money, okay? Separate it, okay? Do the wallet test. Take your wallet out of your back pocket. If you've got $5,000 in your wallet, you may have a separation problem, okay? That money may be better served working for you. If you have an extravagant amount of money in a savings account and it's losing pace to inflation, you might want to look at the opportunity to maybe spread your money and build some money machines that are starting to work for you rather than the other way around, okay? Let's get here to the live stream. I've got some folks that I really want to call out this evening. So glad you guys could make it in. And for you guys that followed me on Instagram, don't lose out on that opportunity. I just give a little bit more of an insight on who I am, what I bring to the table. I'm a family guy, hard worker. Again, I'm one of the few guys that has started a fairly successful YouTube channel. I don't know when I get to consider myself a micro influencer. I don't really care about that. But 15,000 subscribers strong. I'm very proud of the project. I don't know how many others would persevere for the sheer sake of the goal of the channel, putting 300 videos online and leaving no stone unturned with the topic. For as little money as I do end up making with regard to the compensation through YouTube, maybe I'm a victim of censorship. Who knows? We'll see. That's all right. As long as they don't pull the plug on me, we're going to continue to gain an audience of devout subscribers who are taking their message, that of which I would never, ever been able to reach this many people without the power of social media. So congratulations if you've made your way into this. This project is only going to grow. For folks that have made their way into the channel over the last 3 years, quite frankly, you're on the ground floor of what I feel like has the potential to be a very large movement. And the more people that are aware of the prospects of eliminating the middleman, okay, for a lack of better terms, that's what it is, okay, eliminating the middleman, direct connecting yourself with the stock market, liberating your dollars, putting it into an account, allowing those dollars to grow unobstructed, okay? We've known for decades how important it is to lower our tax liability, okay? I contend that it's just as or more important to acknowledge and lower the prospect of fees, which in most cases are extremely hidden, and a lot of people are naive, not only to the fees when they go in for the initial consultation, but especially the impact of those fees as you continue to be invested with certain brokerages over time, okay? Very important to understand. All right, it'll take you 10 minutes to run the scenarios out and mathematically understand what it is that I understand about the effect on the compounding interest, okay? I leave the Trading Academy website on the bottom of every single one of my videos, and if you just took 10 minutes and ran through those scenarios, okay, it allows you to take 3 scenarios and compare those scenarios. It's gonna really be an eye-opener for you. Now, if you do that, you're just gonna be more the wiser for it. And if you want to continue to seek out your exposure through a financial planner, that's your choice, okay? The whole idea on the Independent Investor channel is that I don't come on here and tell you what to do. I don't do that, nor can I do that. I can't. What I'm looking to do is facilitate a discussion on financial stewardship. And I believe we're doing that. And we're opening a lot of eyes by doing that. And we're doing it in a manner that doesn't focus necessarily on the perfect stock to buy. There's way too much other stuff philosophically to talk about than me just coming on here and ranting off 3 stocks to buy a week and growing my YouTube channel in a shallow manner to 100,000 subscribers that come on and tune into the channel and want that magic stock every week. I'm here to tell you that doesn't exist. It doesn't. There's a big difference between single stock investing and investing passively in your diversified ETFs that we talk about all the time, okay? The product identification side of the Independent Investor channel, very, very simple, okay? Very, very simple. It's not a huge secret. I just went to Home Depot this week, one of my favorite stores, equally one of my favorite stocks. I use an Apple iPhone all the time. I own stock in all these companies, Johnson & Johnson, Pfizer, Wells Fargo, Bank of America, JP Morgan, Chase, right? This isn't a secret, guys, okay? And the more we make this commonplace in our dialogue, the more we're going to increase our awareness and financial IQ and learn how to deploy these in a way that can really set us up financially well into the future, because you only have one crack at it, okay? You don't get to redo life. You only get one chance, all right? And that's what we're looking to do. I'm trying to impart some knowledge to folks that are older than me and younger. No discrimination whatsoever. I don't care where you come from, but I just want to welcome everybody that's come into the channel, especially those folks that have made their way in for the first time. Really robust group tonight. I got Columbus, Ohio. Just scrolled all the way to the bottom here to hopefully get these comments to dump in here. But I am going to start kind of making my way. If Money Matters is in here, I'm not sure. That sounds like a channel creator. If you are, welcome to you. Very cool. I don't know if you're back in the group here. Some folks welcoming back from the vacation. I'll tell you what, that's liberating. If you can't tell, I've had some folks at work say that I look a little different, maybe a little darker, maybe. This sun I brought back from St. Martin was the stuff that got through the 100 sunscreen that I had to wear, because I typically go from red to white to red to white. So, but liberating. It's a beautiful place. Some of the topics that we're going to be addressing, certainly investing for certain age brackets. I'm going to make a video for that 16-year-old who came onto the channel and left the comment and felt really humbled that they made their way on, was really interested. And again, there are folks out there. There are the younger kids that are hungry for this information. There's once you start to get into your 20s, you may have a little bit more of an idea about what you're going to do with your career, but I can tell you that the distractions probably increase tenfold in your 20s, which is probably a big reason why a lot of folks end up waiting to invest. And you're really giving away the ace up your sleeve with regard to the time that can help that compounding effect if you just end up tripping and falling into a diversified S&P 500 product, man. I mean, it doesn't get any easier than that. I kind of gave you the skeleton key right there in about 4 seconds, okay? S&P 500 is where we kind of start. 510 companies, 509. It fluctuates a little bit, but educate yourself up. Start from the highest market cap. I don't know if it's fluctuated. Microsoft, Amazon, Apple. I've kind of been trading places. Amazon's over $1 trillion valuation now. Not saying we go out and buy Amazon, but if you do own the S&P 500, you do have a small exposure to great companies like Amazon, Google, Facebook, things like that, Apple Computer, right? All the largest large cap companies in the US. I had one of my great friends of the channel, Brenny Feliz, hit me up and kind of talked a little bit about the safeguarding in these brokerage accounts. Okay, I need to do a little bit of homework on that as well. I think it's a little bit different than the FDIC guarantee for savings accounts. I don't think you have such guarantee, but I do need to look into that. Certainly, if my fact checkers are in the group and they know who I'm talking about, Ernest, if you're in the group, you can check that, take that for action. But I don't know how much protection is available through the smaller brokers or the large brokers, for that matter, if we did have a catastrophic financial downturn. But it was a good question. I typically don't invest out of fear. If I had that level of fear, I would probably not opt to invest, or I would adjust my tolerance back to where I'm not exposing any more than I'm comfortable exposing to the market. So I've got K2 in the group. Hello to you, K97, who's been with me for, geez, a long time, talking a little bit about its experience with M1 Finance. I'll be kind of chronicling. That's been a sleepy portfolio for me. It's up 7%. I haven't changed a thing. I'm dollar cost averaging at that at $25. I do that for you guys, okay? I don't need to do that. But I felt compelled to start the M1 Finance account, and I may do the same with Webull. I don't really know. But those are the 3 discount brokers that offer free trading, and it fits, the shoe fits on the Independent Investor channel. I don't want to oversaturate the channel either. I think with First Trade and M1 Finance, I think we can at least discuss those options, and you guys can research them on your own and make your own informed decision. But M1 Finance, we're up about 7% in that spider portfolio. You guys know it's a little more heavily tech weighted, 14% in tech. Tech has done quite well. All the way down to the materials sector. It represents all 11 sectors in that. Just a cool way to invest. It's broached over 1,700, okay? And I'm doing those to prove to you guys that the barrier of getting from that $0 to $10,000 is achievable. It's achievable. And I'm tackling the biggest barrier that people have getting from that 0 to 10. Trust me, if you guys are looking at your accounts right now and you're saying, gosh, the stock market's bananas right now, it doesn't really seem like my account is moving that much. What's going on? And you start to get all this second guessing of why you're doing what you're doing. But I tell you what, if you give it the proper time and you give it the proper discipline, typically the longer you hold assets, the more it's going to reward and provide you that validation that you may not have initially when you first start investing and you're looking at your account and you're like, oh, geez, I'm down. I was down 45 cents in my first trade account today. I was down 0.01% today on a day that the market was up. I was up a few bucks in the M1 Finance account, maybe 12 bucks or so. But don't seek out your validation on such short term, okay? Don't expect that you're going to start this and you're like, man, I get this. I validated the reduction of fees. It's super important. I really am stoked on the platform. I'm going to invest. And then 3 months after, you're looking for some sort of validation as to why you're doing it, okay? Go do something else, okay? Take some pride in the fact that you've taken the scary step that the majority of people really won't take in seeking your exposure to the stock market and doing it in a manner that is aligned with what you want out of the stock market, okay? We're doing well. I haven't made any moves in that for a very, very simple reason. When I do chronicle that M1 Finance account, you guys know I don't come on every week and blah, 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 this and that with the M1 Finance. The affiliate commission has all but stopped. Every now and then I'll get one that trickles in there. That's totally fine. I think that's a reason, and you guys can thank me for not inundating the channel with a bunch of sales pitch and expecting that I'm going to drive my small audience to M1 Finance. If you're paying attention to the channel and you're really interested in the topic, you'll either make your way into that, or by nature of our conversation, you've already started an M1 Finance account like myself, okay? Or conversely, the first trade option. And right now in the first trade option, we have added a little bit to Halliburton. That's about it. I'm tempted to add a little bit more to Kinder Morgan, which has really performed well. I'm up 16% in Kinder right here, but I haven't changed any of those positions either in the first trade account. Like I said, we had a pretty minuscule day, up 45 cents today, but $4,628 in that account, being a little bit more aggressive with my dollar cost average. Again, providing a roadmap of what's possible. If you're out there and you're like, wow, okay, this guy's obviously motivated, but show me the numbers. Okay, these are my fun accounts. Okay, I do this to prove a point. All right, but Allegheny Tech, Fortis Utility, Halliburton, Huntington Bank shares in the financials, Key Bank, regional. Okay, Kinder Morgan, Manulife Financial, another regional, Marathon Oil. You guys know I'm a big holder of Marathon Petroleum, which is really starting to make a comeback. Nokia in the 5G sector, right? Telecom exposure, nice 5% dividend there. Orange, which is ORAN, which is the French telecom company. Sanofi, and then I do hold a base in there of the small caps, okay, through VB. All right, that's my portfolio rundown in first trade. So 46, that's 46% toward my goal. Okay, once we get to that $10,000 mark, then we'll look to reassess, reevaluate the portfolio, maybe keep it on track. But doing that to show those investors, man, if somebody's out there and they're 16 years old and they're like, wow, $10,000 is a lot of money. It may seem unachievable. And when you're young like that, it seems the most unachievable. So I think it's extremely productive for folks to think about money in a different way. Okay, try to think about money in not a way that you've defined over your 16 years of life, but maybe here's somebody out that's got a little bit more experience. Okay, I'm trying to be nice here, but for folks like me who've kind of been around the block a few times, our advice is warranted, and there's certainly some folks in the group that would kind of attest to that too. Some really good experience in the group. Again, Brent, thanks for making your way into here. I've got Larry Massa who says, "Hell yeah, it's on." It is. I'm real stoked. I could probably just do live stream over YouTube. I don't know. I keep my creative options open. I really enjoy this. I think I could have a nicer set if I end up coming into a little bit of money with the YouTube channel, and I'm able to maybe procure a home, maybe buy a home. I don't know. Someday, a YouTube channel will be actually on the top of my list of something that I really will insist on having, because this has become part of my life. It really has. I'm addicted to helping people. At least I'm addicted to the prospect of knowing that my information has the potential of helping a lot of people. Really does. Nothing is more satisfying to me when I get those validations back to say, hey man, we're looking good. The VOO is up 24%. Stock market can force you into a love-hate relationship, okay? So just be really careful. You guys are gonna find, I'm less 50% exposed right now to the stock market. For you home gamers that are keeping track, again, I will say I'm 48% of my invested capital in the stock market, both foreign and domestic, okay? I've been through this gig many, many times. I will come on and eat some crow and say that I have been dead wrong on the stock market. And the ironic part to a stock market that from day in and day out is going to either go up or down. You would think that you have a 50-50 chance of guessing the potential direction of the stock market. The majority of the time, the stock market will humble you and it'll tell you that you are in fact dead wrong. Okay, so the idea is that you find those strategies that work: dollar cost averaging, diversification, etc. All right, give your money the best chance of success in the stock market and stop trying to beat the market. Okay, that's typically not going to work very much, but I've rewarded myself for being a pretty heavy investor over the last 10 years, and I'm taking a little bit of money off the shelf. That's just for my continued balance of my exposure limit and how I want to seek out that exposure to the market. And quite frankly, I don't want to be fully invested right here. That's just me. That's just me. And for you folks that are starting portfolios of $500, keep a relative perspective on your investment protocol. You don't need to come onto the Independent Investor channel and say, Ryan's pulling all of his money out of the stock market. I need to do the same and try to save a 20% downturn. That's absolutely not what we are saying. Have a relative perspective. If your age is in line with somebody that has a 40-year time horizon, the best thing that you can do is heed my advice to myself. Okay, if I was 20 again, I would buy the S&P 500 and that's it. And I would never touch it. You guys can disagree with me if you'd like, but I think there's a lot of savvy, prudent investors out there that would absolutely agree with that sentiment, as boring as it could be. It can be very boring. S&P 500 has provided not only diversification, but some really, really good consistent growth over time. And for the amount of risk that you're taking relative to the performance of the S&P 500, it really just cannot be understated. All right, good stuff. Bob Wright says, glad you're back. I'm glad you've had a good vacation when you're ready to end the vacation and go back to work. I do actually really, really enjoy the work that I do. The financial discussion I run and the topics that I cover on the Independent Investor, I do so as a side hustle, as a side project. I'm very passionate about it, but you guys are all part of the journey with me, man. So it is glad to be back. I'm still glad to converse with you guys. I did really miss it. I did look up for Alpha Path, the question on IRM, the storage facility company falls into the REIT category. And my response was accurate with what I'm going to reemphasize now, with regard to an 8% dividend being a little bit suspect. The highest dividend payer in my portfolio now is the newly minted Blackstone Group, which is no longer a limited partnership. So for you home gamers that did not know that, I've held 100 shares in Blackstone for a long time. I've since rotated those shares back in. It's been performing quite nicely. Made some really good money with the Blackstone Group, but it's nice to see that they've dropped that limited partner designation. So those tax concerns that were brought up earlier on in the year, if not last year, there was a few savvy folks that dropped that information into the Facebook group that we run. That has been absolved away, and now you can own the fine company Blackstone Group in your Roth IRA if that's how you choose to accept your exposure there. That's what I have, 100 shares of Blackstone. Welcome back. Hope you enjoyed your vacation. I really did. It's very humbling to me to be able to go on a vacation like that. I took the whole family, so there was 11 of us trooping down to St. Martin. It was a lot of fun, and I didn't get to share all the pictures that I wanted to through Instagram, but I really think it's important for you guys to kind of understand where I come from, what I represent, and I think for the relatability, I want you guys to kind of understand I'm pretty fairly simple fella, and I like to be as transparent as I can with some of my personal life as well, and kind of let you guys know what you're doing. I think that's only fair. I don't really aspire to folks that are really just all in it for themselves and not willing to kind of relate with the group. And that's kind of what I'm attempting to do, is to provide some transparency. So good evening all. How's everybody? Got Joe in the group here, is just a really cool man. I sent him back a request for him to Google the drug bust that just took place. Something to be proud of. I'm not going to go into any other further details, but if you do Google the big drug bust that just happened there, is pretty awesome stuff, man. It's on YouTube, it's on Google. Go check it out. It's pretty cool. But think pharma may go down. K97's hitting. I saw a big drop in J&J. I don't know what that's all about. But I've kind of pared back. I was doubled on my sector spider exposure within the Roths. I took profit in every single one of those. I still own the singular positions within M1 Finance for each of the sectors. Excuse me. And healthcare was one of those sector spider ETFs from Vanguard. Now I just own the single stock in Medtronic, Johnson & Johnson, and finally Pfizer. Those are the only positions that I have right now in big tech pharma. That's what I have. Took an opportunistic buy in Pfizer at 41. Huge dividend. I'll continue to sit on that. That's just one of those major players that is just, it's almost like shooting fish in a barrel owning that stock. I've made money with Pfizer every single time. I think you'd have to try not to make money with good companies like that, but we'll see what the sector does. I'm not really sure. I know I've been beating this drum for a long time, but I do not trust the stock market, and I'm sorry if it's not sexy enough for you guys that expect me to come on here and throw stock charts and penny stock charts on a live stream and walk through those and tell you to buy and sell and buy and sell. I'm not allowed to do that anyway, so I won't do that. But I'm a little bit more realistic with where I think the stock market is. And right now, all I can do is chalk it up to one word, and that is bananas. Okay. If you're a believer in the economy right now, which I am, okay, you'd think that I'm a bull on the stock market, and I am. I'm just realistic. Okay. I think if we just get one excuse for this thing to rubber band on us, I think we could be down 2,000 points in a very rapid, short amount of time. You guys, if you haven't learned anything being exposed to the stock market over the last couple of years, what you should have learned is that when the stock market goes down, it goes down very violently. Okay. And that's the love-hate relationship that I'm talking about in the stock market, both of which are emotion. Okay. You guys understand where I'm going with this. Right now, it's easy to come on and enjoy, and we're all making money, right? Blah, 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 okay? There's not anybody that's tripped and fallen into the stock market that's not making money right now. If you're not, maybe you need to reach out to me on the side a little bit, and I'll be transparent and provide the testimonial of where I'm at. And my dad made the comment to me today, "You're making too much money in the market." And I said, "Yeah, I am. I'm concerned." And then that's the reverse psychology that I'm trying to import to a lot of you guys, is that when it's all roses, it's typically not as rosy as you think that it is. Conversely, when it's going down heavy, and you're hating the stock market, it's typically not as bad as you think that it is. But when there's a reciprocating sell side trigger, and the quants are going and the algorithms are triggering and the market is selling off, that's not the time that you want to start hating the stock market. Again, I'll have people come out of the woodworks and start throwing tomatoes at the Independent Investor channel and be like, "You're running an independent, it's all a scam. Go jump off a bridge." If that's your attitude of the stock market, you really need to recalibrate your approach to what you want out of the stock market and really try to retune your expectations of what the stock market can deliver, because right now it's all roses. Okay, I get it. We're all empowering ourselves, and there's nothing that I want more for you guys than to grow wealth. Okay, but let's do it with a fair acknowledgement of what the stock market can do. Okay, let's be fair. Be fair. Be fair to me. I don't really care. Okay, I'm pretty tough, but be fair to yourself. Be fair to yourself. Now's the time to start building cash. Now maybe be potentially the time to evaluate your portfolio. Okay, if you're one of those $1,000 to $10,000 investors, stay the course. Stay the course. It's not going to hurt you to do that. But maybe your funding schedule is $100 a month. Maybe you want to maintain that $100 a month, and that's being proactive on your plan. Maybe you're investing $400 a month, and maybe you want to scale back to $200. That's another prudent move. Why keep your foot on the accelerator right here with the stock market in its current condition, hitting record high every single day? One of two things are going to happen. It's going to continue higher, or it's going to adjust back. If it adjusts back, are you going to be in the position to say, "God, man, I was right there. I tuned into Ryan's live stream and he was like, it's really high right now, you know?" And I'm not saying time the market. I'm not saying sell everything. I'm saying take an objective look at your program. Okay, improve upon those things that you can if there's room for improvement, i.e. save cash, i.e. identify your dollar cost average program, i.e. identify how you've performed this year. And if you've performed well, don't pass on the opportunity of patting yourself on the back. Okay, I'll be the first to tell you, you made a scary move. You got involved in the stock market. It's a big, scary place. All right, initially you thought you had to take on the world, and you figured out that it was a lot more simple than that. And you actually are able to acknowledge a little bit of percentage gain in this tax-free, wealth-preserved portfolio that you've built for yourself. All right, good on you for doing that. That's good stuff. All right, don't hesitate to acknowledge, but be fair about where we are currently. Okay, be fair. All right. Let me try to cruise down here and acknowledge some of the folks in the group. I think I've got a pretty good group here. And I thank you for that. Again, Brent's in here, and I'm sure he's responded to comments while I've been issuing my 45-minute opening monologue. So I do appreciate that. Brandon Rogers, 1,400 to invest from what I built up with Acorns. That's really cool, man. You using that. I know Dave on the Average Joe investing is really big into Acorns, and I'm not sure, Brent, if you're hearing me out. I'm not really sure if you've covered Acorns, the app, as well. I'm not sure if you're an advocate or a proponent to that app. I don't know. I don't have an opinion on it either way. But if it allows you to save money, I think there's a small fee that comes along with it, of course. And you guys know how I feel about that. You know, you're kind of robbing Peter to pay Paul a little bit. But if it helps you exercise a little bit of discipline and save some money, I'm all about it. That's really cool stuff. I says just putting it all towards the Vanguard ETF from a Roth IRA. Decent idea. Probably put an extra 200 in a month. I'd like to know your age and what you'd consider risk tolerance. It's the same exercise that we go through. This is not something that's proprietary information from me, and it's certainly not worth you sitting across from a financial planner and having them charge you to ask those 2 questions of yourself. But if I was going to assume that you're in your 20s, maybe 30s, right, your investment time horizon is quite lengthy. I think that's a prudent move of $1,400. Another alternative plan, remember how I talked about not really putting your foot on the accelerator right here. Would you pose that question to me if we were in a 30-40% recessed bear market? If you did, I'd be like, you bet, invest the whole thing. But very few people or beginning investors have the mental fortitude to ask that scary question when the question should be asked. Because right now, I don't know if you've been pulsing in on the stock market or if you're watching what's happening. It excites a lot of people to get involved. My point is, I don't think you need to be in a huge rush. All right. I think potentially 5-share position in the S&P 500 at 1,400. I think that can work just fine as an entry-level position. But invest for the long term, certainly. And make sure that you're looking at the Vanguard suite of products. Somebody else brought to me the attention of the Charles Schwab S&P 500 ETF as well. I believe the ticker symbol is SWIPX, something like that. I think I'm fairly close, but probably not. I'm pulling that out of my head, guys. But there is an S&P. You guys can Google it and check it. Very low expense, but somebody brought another S&P product my way. It was not Vanguard at an expense of 0.013. So very intriguing on that. It was not Fidelity. The broker, the offerer is escaping me right now, but certainly you can do your homework there. You're not going to go wrong with a Vanguard product. S&P 500 there, 0.03, right on the expense. The industry understands that they need to move in the right direction towards zero to make informed investors like us happy, because if you're paying fees, you're naive. You're 20 years ago. I don't know what else to say. And if I've offended some of you guys by saying that, good, because I used to be one of those folks that had my freaking head in the sand. Probably could say that I had it somewhere else, but I won't do that for the sake of the audience here. But it's all right. It's all right to want to do the right thing, get invested, and then identify maybe some years later that maybe it wasn't in your best interest to accept that level of fee structure because it erodes your long-term growth. But I think you're fine there. I really do. I think 200 on a dollar cost average. I sure as heck didn't do that when I started investing. I started with $50 a month. If you can do 200's a lot of money. It's a lot of money. That's a pretty aggressive dollar cost average schedule. Start with 100 and put that extra 100 to cash. Okay, because you didn't disclose to me how much cash you have. If you're sitting on 10,000 cash, and you propose that 1,400 to invest, that tells me a whole lot more rather than the 1,400 is my savings and I'm taking the whole wad and dumping it on a record high market, right? You see how the philosophy changes? You see how the relative perspective changes on that, even when we're talking about an amount of $1,400, okay? It's all relative. I'd give the same advice, Brandon, if I was talking to somebody who came to me and said, I've got $14,000 to invest, or I've got $140,000 to invest. The rules are still the same, okay? But we just have to be a little bit careful and cautious right now where the stock market is. If you're 20 years old, you're finding my channel, man. All I can do is pat you on the back and say, take the information, use it, abuse it. You can drop me because once you have the information, man, as liberating as it is, You can continually tune into the Independent Investor channel for reassurance, but it's not necessary, man. It's not. It's not. This stuff is not rocket science. It's not some secret squirrel thing that I discovered and I'm going to come on and become rich on YouTube on. If we're going to become popular and start a real movement where really my long-term goals are, we're going to do so by nature of the fact that we've taken investors like you who pose the exact same question as you and have put this information to good use and got into these accounts that we talk about. And the account that you choose can really have a huge effect on your long-term productivity of your money. Okay, so if you can get that right away, whether or not you want to go with a major brokerage, whether it be Bank of America, I'm very transparent. Most of the audience knows that I'm with Merrill, and Merrill is quite good. I've been with them for a long time. But Fidelity, TD Ameritrade, E-Trade, right? Those guys all offer self-directed accounts. Chuck Schwab, they're very good. Those are the major brokerage houses. And then, of course, the affiliate program that I run on the Independent Investor channel are the two accounts that I've already chronicled toward the top of the program through First Trade and through M1 Finance. Talk around, Google it. I'm sure you can find all kinds of forums. I represent a forum here. And if I had a pulse of multiple people joining in and saying M1 sucks, I would change my tune. I take that stuff very seriously, but I can't tell you that's the case. I can tell you that the majority of the opinions that I get back, people really do recognize how important it is to get an account that doesn't charge them anything. It allows you free access to stock. It allows you free access to ETFs. And that's contrary to what the industry has traditionally demanded from customers in the 5 to 7, sometimes higher entry and exit fee. Okay, you just don't have to. You don't have to settle for that type of performance anymore. And if you can keep that perspective, I think there's a difference between an M1 Finance potentially, as opposed to some of the major brokerages houses, as in way of the aesthetics of the offerings to the customers, data analytics, watch list features within. Now, First Trade has a lot of that stuff, but I think you guys will notice I have accounts with both, and I can tell you in my honest opinion, I do think there's a difference. Okay, I'm glad my money's with a major brokerage house. I would feel comfortable in either one of the two smaller, but there is an aesthetic difference. There really is. I really like the platform with Merrill. It's been very good to me, and maybe I'm slightly biased to them, but that's my honest opinion. I'm a very, very happy customer, but you don't get free trades with Merrill if you go with them and you've got less than 25,000, man. That's a drawback, okay? If you can invest $500 in a Roth IRA with M1 Finance, and you're like, you know what? I just posed Ryan with the question of buying the index passively. You can invest in M1 Finance free of charge. That's just very powerful, very powerful. Great question. Thank you for making your way into the group, man. Good stuff. Right below, I've got Greg Cammie. He says, hello everyone. It's great to see you, man. Awesome. Appreciate the comments. Appreciate the latitude. I obviously have not been uploading a lot of content onto YouTube. I just can't keep up with some of the daily uploaders, the guys that are looking to use their money and become wealthy and then all become philanthropists through YouTube. And me and you both know that's not the case, okay? But I refuse to do daily uploads, and this vacation has cut my income in half. I just looked at the analytics behind the scene and I was like, wow, that's amazing. Geez, I guess I'm not allowed to take a vacation on YouTube. I could really care less, to be honest with you, because I had a great time. But it is glad to be back. I've got Doug here. He's a great friend of the channel, man. It's always good to see you. Pop into the live stream, support the mission that we got. I'd be curious to know if you drop some ticker symbols, that of which I do not recognize, into the community discussion here. You always come through. Probably some killer swing trading opportunities in this market. I've really not been very aggressive. Just to give you guys an idea of my pulse. As I told you, I mean, I'm 48% right now. I've got a lot of cash on the side, and I'm good with it. I'm not apologizing for my position. I'm really shelving a truckload of profit. I'm sitting on more money than I ever thought possible. And in retrospect, through my time as an investor, I really can't tell you how the hell I got here. I can't. Other than an aggressive awareness to the stock market. You know, you're just not going to get ahead in the stock market unless you take the time to pay attention to some of the bridges that I'm trying to build for you guys as new investors. All right. I'm where I'm at, but look at all the mistakes that I've made. I've been with 4 brokers, man, and most all of them were ripoffs. Nice people? Yes. Ripoffs? Yes. Okay. I'm trying to save you all that. I invested in an era that didn't have ETF index funds. Okay. So, and investing in single stock was like, whoa, no, only the rich do that. All right. Talk about misconceptions in the industry. All right. Now people are buying stock left and right, baby. Robinhood, download, boom, you buy a stock in 5 minutes. Do I advocate for that? No. But the power and the availability of direct connecting to the stock market is absolutely there. Okay. And I'm just trying to take you guys back and tell you, I remember an era when I had a RAM cell phone. I don't even like to call it a cell phone. It looked like a brick. Y'all remember that? All right. You got to make a phone call for 22 minutes and then you had to charge it up again. Okay. And it was just cool to make a mobile phone call. All right. These devices right here are powerful, powerful. Leverage it. All right. If you're hearing me out, baby, you millennials out there ought to be gravitating toward this information. And that's why I like it when some of the younger community make their way into the independent investor channel, because I certainly do not want to be misconstrued that I'm talking down to people. I'm doing this to talk to people. All right. And maybe have them circumvent or sidestep some of the landmines that I stepped right on during my investing career. And I know there's a lot of people out there who are like, yep, I've stepped on a few of those as well. I know what you're talking about, Ryan. The stock market does bite. It's not all about roses. It's not. All right. Really hoping for 3M earnings tank if it goes to 150 or lower. Geez, Canine. I mean, I don't know, man. I've taken this thing into the red pretty hefty. I bought 3M at the wrong time. So I tell you what, man, I hope you're right. So you get a good entry. I'll take it into deep water for you, so you get a good entry, all right? Yeah, I got my 12 shares at 3M. It's an industrial cornerstone of my portfolio. I sleep well at night owning 3M. I'm totally fine. If I never make money in my life owning 3M, then I will leave it to my children. And hopefully the generational wealth will pick up at that time, and 3M will finally turn a profit, you know. 3M will be just fine. But you're right, the stocks go through these swoons like this, and these are really the time you want to be implementing the opportunistic buys on some of these stocks. I mean, J&J might have just provided one of those for you today. All right, so really good. But good luck. Happy hunting on your 3M acquisition plan. It's really good stuff. Good evening. Can you talk about the main factors that influence the price of bonds? Thanks. They've been really, really on fire here over the last 5 months. There's been a lot of speculation as to why bonds are moving in conjunction with equities. Very, very difficult to answer that question. I almost liquidated my bond portfolio. I'm up 10% in a couple of them. Now I'm not anymore because they adjusted back. If you paid attention to Wednesday, the bond market really took a huge hit. Really did. And you guys know I seek out my bond exposure through the ETFs and Vanguard. You know, I haven't owned bonds that long, but they've just performed really, really well. What You know, I really don't know. I really don't. I really rely on the diversification of the bond funds that I own. I may be totally screwing that up with regard to me owning the total bonds market, and then the shorts. I don't own so much of the short term, right, which are bonds from 1 to 5. I don't own so much of that because I have other opportunity within my employee sponsored. But the intermediate term is the largest cash position in my bond ETFs. I own 2 of those, both on the corporate side and the U.S. Treasury side, and then the longer term, which is another smaller aspect. So I think the idea when you enter into fixed equities is not so much to answer what fluctuates, what impacts the price of bonds. Keep in mind, these ETFs hold, you know, thousands of bonds. Okay, so the person that's actually purchasing the bonds to try to buy them, put them in there and sell them at a profit either before or at expiry. Okay, all that's happening behind the scenes, and I just look at the rate of return and the little bit of dividend that's paid in the ETF. It's a really good question. I may actually just do a video on that. This has been atypical. What's been going on in the bonds market. Got fairly lucky. I bought my bonds, and I swear they went down every single day for about 3 weeks. I was like, geez, man, this is supposed to be fixed equity here. And since then, it's almost as if they've gone up every single day. It's really interesting. I like how the bond ETFs perform, significantly different than watching the volatility in single stock exposure. I do still own all my bond exposure, just for your awareness. So about 13% of the investable capital. So 13, 46, and 38, that's about where I'm at. I'll tell you where I'm at in my allocation. Since you perked up an interesting question here. But what makes the bond price move? I don't know. You could probably get a better answer from Google than you could from me. And if somebody wants to take a crack at that in the community, that's just a great question. It really is. So let me see here. Yeah, so 13 in the fixed, 38 cash. So I was right, in 48.64 there for equities exposure, just to give you an idea kind of where I'm at. All right. And does putting any money in the Roth IRA have any risk? Investing carries with it risk, and it's a really good question to ask that. I'm addressing Brenny Feliz here. I don't know if all investments have risk. So Brent came back with kind of the stereotypical answer, but it's probably the best answer. It really is. And again, guys, don't approach investing. If you're scared of investing, don't do it. Okay. But if you've gone through the proper validation of investing as properly as you can, you should have come to the realization that investing is so much more responsible than not investing. Okay, so once you come to that realization and you've gone through that deliberation for yourself and you say, you know what, I'm ready to step into this realm. I'm ready to really pay myself. Okay, what's the best avenue to pay myself? Well, maybe that's to gain some diversified exposure into the broader market. Okay, fair enough. The next question that you have to answer, and I've broken this down for you guys so simple, is it all comes down to your exposure. Okay, your level of exposure, which means that if your net worth is only $25,000, maybe you want to go from $0 to $500 invested. Okay, that's the relativity that I talk about. It's not as if you need to take every single dime that you have because 5 minutes ago you justified becoming an investor. You don't have to do that. All right, and the step that you'll take, maybe dollar cost averaging 1% of your income. Start at an insanely low amount. Okay, because it's going to be so much different than not investing at all. And on the onset, use this to trick your mind a little bit. Okay, now play with me a little bit here, guys. If you end up doing that, over time, you're going to really become accustomed to the movement of your money. You're going to become accustomed to being part of conversations to where you're a freaking investor. You're doing it. You're taking that mental step toward self-enrichment a little bit, okay? You're not living in the day-to-day rut of inflow, outflow. I get paid, I spend. I get paid, I spend. I'm never, ever the focal point of my pay. I'm never looking at paying myself first, okay? And that little bit of 1% is the one little step to break the chain of getting out of habitual behavior. And it's not about the money. I've said this many times through the course of the channel. If you're new to the live stream and you're hearing this for the first time, this information is really, really powerful in that 1% or that $25 that you're allocating to a program, buying one share of the S&P 500 because you're sure you want to invest, but you're not sure about this level of exposure, okay? And you just start it, okay? It's going to mean so much more starting that account, okay, than trying to rationalize not starting the account, okay? It's going to allow that conditioning over time and allow you to evolve and grow an investor, okay? So once you get this exposure level down, and this comes through assigning that risk tolerance, right? If you're like, you know what, I'm kind of a midstream investor, I want to be kind of careful, I want to stay a little bit more close to the vest, okay. Then you need to answer, how are you going to meet this exposure level? How, okay? And you get that through the product, okay? What product are you going to choose to gain your exposure to the stock market? Fairly simple. That's about the most simple way to break this portion down for you, to go through some of those preliminary deliberations. Guys, I'm with you. I'm on your team. I love you. These preliminary deliberations that you'll go through will be the toughest, okay? Do you think it's hard or easy for me to be an investor at this stage in my life? Piece of cake, piece of cake, all right? And I want new investors to see the motivation and see that, all right? But I've built up that evolution. I've built up that tolerance. I've built up that thick skin to the stock market. I've built up that adversity over a few moons, few decades, okay? I built that up, and if we can manufacture some of that adversity for you, then we're making good strides in the independent investor channel in getting your investing IQ accelerated for you. You're only going to benefit from it, man. You're going to act in ways that your friends and family don't even react to the stock market, because they're like, did you see the stock market? It went down 2,000 points today. And you're going to be like, yeah, I'm thinking about buying a few more shares. And they're going to be like, are you crazy? Where are you getting your information? And you're going to be like, I saw some crazy YouTube guy. And they're going to be like, what? You need to seek therapy, you know? But you're going to react in a way that the stock market, it's going to be the correct reaction, right? Okay. I haven't succeeded in the stock market because I've reacted like the herd. Okay. I've said it many times, your success in the stock market will be making those decisions contrary to public opinion, all right? And that's hopefully what we can kind of do, is get you to that free will type state of mind to be like, you know what, this market's down 30, 40%. The only prudent move right here is to start making some stronger moves. Now's the time to do it. Is now that time? I'll leave that rhetorical question for you guys. You're all a very savvy audience. You guys are all coming from different backgrounds and different approaches to the stock market. But it's fair for me to at least pose those rhetorical questions so we can start to answer it and be like, geez, Ryan brought up an interesting point, man. Is this the time where I want to be taking 10, 25, 50 grand and just dumping it on the market because I'm interested in investing for the first time? I think not. Okay. That's just my opinion, and I'm entitled to it. That's why I share those openly with you guys. All right. Let's continue to kind of cruise down what's good with Fidelity. Brandon Rogers hits me up. I put those into the premier large brokerage category, and I do have the luxury of turning back hundreds of opinions based on what I've got from a lot of the major brokerage houses, and Fidelity is usually the top echelon. Schwab and TD Ameritrade, those are typically right there at the top, and I get a lot of good positive feedback about E-Trade. Guys, it's just for the sake of discussion. I can't tell you firsthand. The only one I can tell you firsthand is the one that I'm involved with personally. I will not contend to know something that I don't know, but Fidelity is a very well established, very well, it's very well liked, especially across my community. And I don't know what type of incentives they have. Very easy to search out that information for yourself as you're going through the account. Don't make it more difficult than it has to be, okay? You're going to make any one of the accounts that I offered you searching out, you're going to make it a win, okay? But make sure that you're aesthetically pleased with the features, the functions of the particular platform that you choose. And just keep in mind that if you're a beginning investor and you do opt for one of the major brokerage houses, you're probably going to have to choke down some form of a trading or incentive fee. They're going to allure you in with 100 free trades, and once those expire, you're done. Okay, you're going to have to start paying for those trades, and a lot of people just don't see the benefit in it. I'm one of them. I'm in that camp. I don't think giving away your money is good enough. I've been conditioned over the last decade to enjoy free trades, and I can tell you, it's a big deal. It's a big deal being able to manufacture cash in a Roth IRA. It's a big deal by two presses of a button. It's a big deal. Big deal. There's a reason why I'm sitting on $450,000 portfolio right now. There's a reason why. Okay, and that's a big reason why. All right. Hello, Joseph. Going good. So that's a really great question. Thank you, by the way, for that's awesome. I got Tim in the group here, man. Tim Tellers has been with me a long time, man. It's really good to see. It's kind of cool to see the thumbnails where I can see the pictures, so I know who the heck I'm talking to. But it's good, really good to see you, Tim. Awesome to see you kick on here and take a little bit of your time. I know everybody's time is valuable, as mine is. I've got family here right now, and they're listening to the live stream. So they're in town still, just as an aftermath to the vacation here. But I really wanted to come back on and re-energize the Independent Investor channel. I really do feel like we've got something special here. I may be the only one who feels that way, but hey, it's a start, you know. So I really appreciate you guys coming in and helping supporting the initiative. Certainly, it just makes it that much more powerful. All right, 47 here. Probably put an extra 2 up. Good. I remember you on Facebook. Oh, okay, cool. You got some connections going on. Certainly, I got Renee Rodriguez. I recognize Renee in the group. Maybe a few comments that have come through, and perhaps maybe I'm just waiting to respond to. But thank you so much for coming in and kind of sharing your time with me, engaging a little bit. That's the whole point. I wasn't a social media guy up until about 3 years ago. And I didn't even have a Facebook account. And lo and behold, now I've got them all. Okay. I don't know how to use Snapchat, but I don't have Snapchat, but I do have Instagram. We are on Twitter, and we do have a Facebook group, and we do have a Facebook page. I don't know how to leverage those opportunities. If I did, maybe we would have 1 million subscribers. I don't know. But greetings and a lot of blessings to you. Thank you. Really appreciate that. Thanks so much for your help. Information is unconditional. That's really great. That means a lot to me. You know, I love it when folks come in and they offer that. It's really nice. It'd be really cool if you could offer some specifics as well. You know, I was given a specific through Instagram, a financial investor. I came through a quick post of the financial investor, and he offered his up 23% in the S&P 500. That was just a quick shot. Hey man, look at this potential, 23%. You can't argue with that. That's pretty cool. That's success in my man. That's a successful investment, and I'm all about it. I really think that's pretty cool. A lot of different ways to make money in the market, and it's cool to come in and share some of those things. Brandon Rogers, a new investor's first time here in chat. Joe, thank you for that. That's why I really wanted to. I spend the time, and you guys know, and I know Joe sits back, and me and Joe have wrapped offline too about other topics as well, because finances isn't my only passion; it is my number one passion. But I'm into other stuff too. And Joe, thank you for pointing that out. And I'll spend as much time with the new investor as necessary. But if Brandon, if you heard me, all right, maybe you want to go back and watch some of my videos too, man. Those are all aimed at really talking to people. You know, investing is a tough topic. It really is. It's not one of those things that you can just tune into a YouTube channel and magically you've arrived. It freaking doesn't work that way. And that's what kind of frustrates me off of a lot of channels is they kind of profess that it's a learnable craft. There are a lot of things that you can learn to help you. There's also a lot of crap that will mislead the heck out of you. Okay. So don't hesitate to reach out to either myself or the group here, the community. This is a public forum of discussion, etc. And whatever you're feeling about, getting or becoming part of a financial discussion over social media, I know it's phenomenal. I know it. Okay, this just freaking works. Okay, because I can reach a ton of people. You guys are enjoying hearing me. This is my living room, so welcome. It's as if we're at the dinner table talking about finances in a leisurely fashion. So you get to throw your questions at me as much as you want. But it sure does mean a lot to me as a new investor. And hopefully I gave you some other ideas on how to strategically break down certain amounts when you're looking to get invested to start. So if you have any follow-up questions, man, you got me. You got my ear. I know who you are, but give yourself a chance to evolve with the community as well. Give me an idea of how old you are. That does kind of help me understand whether or not we're talking about a 20-year time horizon or a 40-year time horizon. You could be 50 years old, and we may be looking at a 20, 25-year time horizon. Get an idea of what your risk tolerance is. Okay. Man alive, sky's the limit. If you're a young person and you're making your way to the channel, most of the time I come with a congratulations, because I contend that a lot of the young folks, man, their priorities are sometimes way off of financial stewardship, and you all need to reel that stuff back in. Okay, there's going to be a time when you look back and hopefully you find your way to my channel and it sticks. Okay, but if you find your way into the channel and you're one of those folks that already know it all at 18 and you turn this opportunity off, big mistake, big mistake. Okay, because I've already done the vetting for you. Okay, you may not understand my motives, and you may not have to. You don't. Okay, but I make sure that the information, okay, even if you did deploy it and you weren't fully confident in it, that you could succeed in doing so. All right. And I understand, even as a micro influencer and a very, very influential guy, okay, I'm very passionate about investing. There's a reason for that. Okay, it's because I haven't been bestowed. I don't come from money. I've generated my wealth. Okay, and I think it is scalable. What I mean by that is I think you could take and deploy, if not all the strategies that I deploy, and do the same thing. Generate wealth for yourself. Okay, and I'm the first to tell you it's not going to happen overnight. So get that out of your mind. Not a fan of buying courses. I'm not. If you're going to pay $1,200 for a course, it's not going to be from me. Okay, you take that $1,200, put it in the S&P 500. You'll be so much better off down the line. And that's why a lot of people tune into my channel, because I'm right. I'm right. I don't need your $1,200 times 100 clients. I don't need to make 30 grand a month at the expense of other people. I don't. So I've already made that decision for you. Okay. I've already made it for you. The information's free of charge. If you feel like you want to support the channel through the affiliate program, feel free to do that. I receive compensation through those 2 channels, but that's it. Okay. The rest of it, the information that we provide is really quite invaluable. So Joe, thank you for bringing that to my attention. I kind of sensed that when I answered the question. And hopefully guys, you don't mind kind of sitting back a little bit where I work that a little bit, but it's so important. You know, I would have never made that connection had it not been for the opportunity through the live stream that I electively run through this channel. Very, very powerful stuff, man. Very powerful. And I don't know, maybe Brandon will be turned off by the prospect of investing. Perhaps it's the latter, and perhaps we've maybe changed a life. Maybe he goes out and maybe recommends and says, hey, you got to check this guy out. He's pretty fair, you know, and it's not going to cost you anything other than a few minutes, right? Pretty fair stuff. All right. Greetings and a lot of blessings. So, question, what is your opinion suggested about an investing in cannabis stock? It is legal, authorized by the security. You've touched on a topic that I can't talk about on the Independent Invested channel. For the folks that have been with me quite some time, they know that I probably forego a ton of subscribers because it's an extremely hot topic. But it's a topic that I do not touch. You guys are just going to kind of have to accept that as a venue that I don't discuss. I can't. There's certainly other channels that may have the freedom and flexibility to do so. I will say this: if you're looking to start and you're looking to that as your first option, look a little further. Give yourself a little bit of time, okay? Don't fall victim to one of the most common mistakes in investing, in thinking that you have to outsmart the market. You have to find the next thing. You have to be part of a wave or be afraid of missing a wave, okay? And just hear me out, okay? Because I'm right. You know, when I talked about investing in Home Depot, that's not sexy enough for a lot of people. A lot of people are like, you know what, whatever, Ryan, that's boring. I won't do that. Buy a Coca-Cola Classic. What are you talking about? Well, I don't know. It's only a dividend aristocrats that's done nothing but make people wealthy for being part of that great American company. And those are the types of investing philosophies. I think you're talking about, yes, an industry that has become legal, right? Certain countries look on it even more favorably as well. Exciting, yes, exciting, certainly. I'll give you that. But becoming an investor, okay, let me pose you, Renee, with this rhetorical question, and I'm going to leave it with you. Is it exciting enough because you're excited about the prospects of making riches, okay, by becoming part of an exciting, emerging industry, okay? Are you excited enough about this emerging industry enough to sleep well at night, holding these positions as an investment or as a trade? Okay, big difference. If you're looking to invest in this industry, you're gonna need to have some risk tolerance that's gonna even impress me. Okay, because I'm gonna be honest with you, I probably have the risk tolerance to hold those equities. I choose not to because I know how volatile they are, okay? And I don't mean to impugn, you probably do have the tolerance, that's why you're asking the question, okay? But if you're looking for my stamp of approval on buying into the industry, hoping that what? You're gonna make 20%, 30, 50, 100? A couple things can come out of that. Number one, you may think that you can kind of duplicate that over and over and over again. And you may be right. You're probably not. Very, very difficult to continually look at something and find an opportunity that other analysts aren't looking at. I'm talking about thousands of other analysts. So typically my attention is typically on what the good blue chip, best of breed stocks are doing, what the major indices are doing. and typically not spending part of my time or any of my time at all looking at that particular industry. And again, with the restrictions that I have with regard to endorsing in some form or fashion, I would go so far as to say that I'm not allowed to own those. Okay. And I will leave it at that. All right. All right, but it's a great question. Thank you for posing it in the group, man. Certainly, I open the opportunity for the community folks. It's an open forum. I don't censor my stuff. And if you want to leave comments or response to help Renee, certainly there are picks that I could offer. I won't do that through the live stream. The picks, the guys and gals in the group that frequent the channel, they'll know which ones I'm talking about. They can throw those in the group and you can research them for yourself. But I do appreciate that. It's good stuff. King Fan, how do you feel about dividend focused investing? I think it's too powerful to ignore. I think sometimes, you know, I do scope the YouTube landscape, and I think there's an unfortunate habit. I think there's so many dividend investing channels. I can't even keep up with them. Dividend investing is an aspect of investing, okay? And I think, and I may be wrong, but all too often dividend investing can be an exclusive approach. And lots of different ways to seek exposure to the stock market. And that's one way. And I typically refer to those aspects of my portfolio as the cornerstone holdings in the portfolio, okay? Your Coca-Cola, your ExxonMobil, your Chevron, you know, your JP Morgan Chase, those dividend payers that are real beasts in the industry, Pfizer, Merck, okay? You could go on. Some of the REITs are pretty good. But, you know, once you move into the real estate aspect, you may be moving away from some of those historical dividend growth payers. Utilities are a good example. Nextera, Duke, some of those, Southern Company, some of the good utility companies, some of the really good industrial companies, some of those dividend aristocrats, Caterpillar, Cummins, 3M, we've mentioned on the program. Some of the defense stocks, very good. Lockheed Martin, you've got Boeing, that of which I own positions in both of those fine companies, General Dynamic. Dividend investing is absolutely phenomenal. And I don't think people need to stray a whole lot further away from dividend investing, but don't ignore diversified passive investing, okay? For example, if you own 10 dividend stocks, you're not diversified, okay? You can come to me and say, well, I own one stock in each of the sectors. Okay, you're not diversified. You're not. Diversification comes in the form of owning small pieces of hundreds, potentially thousands of different stock. That's diversification, baby. If you get a real hiccup in the market, tell you what, man, those 10 dividend stocks, you're going to see the lack of diversification when every single one of those names adjust back. And it's not a reflection of how well or how bad the businesses are doing. It's sentiment. That's it. Okay. So although I'm a very staunch advocate of dividend investing, I think it's one of the top premier paths to accumulating wealth. I do. But don't do it at the expense of other approaches as well. For example, ETF, index investing, sector investing. I enjoy that. Saving cash, having fixed equities, having some growth. I mean, if you're an exclusive dividend investor and you're missing out on Google earnings right now, Facebook, I mean, everybody was down on Facebook 4 months ago. Look at it now, Google. You had a brief opportunity to buy Google if you were a dividend investor. I don't think you would ever entertain the opportunity to buy a piece of Google. Look at the opportunity of owning pieces of Google, NVIDIA, Booking holdings, PayPal holdings, none of which are dividend. PayPal does pay a small dividend, but you understand that it's a growth play, right? But you can own pieces of those companies through M1 Finance, which is a really cool opportunity. So don't sell yourself short. Investing should never be as shallow as just saying, I want to be a dividend investor, and that's how I'm going to retire wealthy someday. I think you're really, really selling the farm and not acknowledging what's really, really worked over the course of investing, and that's buying the broader market and just owning those diversified products outright. Okay? All right. Killer question. Probably the question of the night so far. I enjoy those. That I get to do a little bit of a philosophical deep dive on my thoughts. So really good question. Thank you. I'm going to just put before the person's name. $250,000 house in LA County. Where? Laugh out loud. I know New York. For $250,000 in New York City, you could buy a driveway with maybe a little bush in front. And you're gonna have to pitch a tent, but the tent is gonna cost you extra, and you sure as hell ain't getting no grass with that either. But now I've been to Los Angeles. I know what you're talking about. $250,000 don't do it unless you want to go all the way out. I don't know, into the desert. I don't know. I mean, they're continually expanding out there, but geez Louise, I think California's got other problems going on. Real estate on a bubble is one of them for sure. I don't see the draw. I really don't. I see value in real property. I was just looking last night at property up in the Upper Peninsula above Michigan and Wisconsin. That to me is value. You say, well, Ryan, you can't live there but 4 or 5 months of the year, maybe. But yeah, I can own 750 acres for, $400,000. That's value. I just think value is in property, not sticks and bricks. Cool comment, though. I know, I agree with you. I was merely suggesting that a $250,000 house with the amortized schedule of the interest would ultimately cost you $500,000. But thank you for pointing that out, Greg. Awesome stuff. Stock market investing, another channel creator, yes, has made their way into the channel. Thank you so much for coming by. Any suggestions or advice to invest on that sector? So I can't render financial advice. I typically try to avoid that word altogether, just for the legality implications, because the one out of my 15,000 subscriber that loses $1.50 in the stock market and comes back and wants to pull the plug on the independent investor channel. So I am at best a testimonial. I am an entertainment channel. So I'm just playing a little bit. You can call it what you will. But what I can do through testimonial is tell you how I approach sector-specific investing. And I typically approach it in this way. If you're going to invest in the sectors, own them all. Choose the allocation that you want to each of the sectors. Like right now, I have 14 to tech. Now, I'll tell you what I have, actually, since you asked the question, Renee. So for the sake of visibility, I'll jump into M1 Finance, and I'll give you guys that breakdown. I've shared this within the Facebook group. I'll give you my allocation to equal 100% total exposure to the market. 14%, I'm a little over in technology, VGT, okay? 13% in healthcare, VHT. 12% in financials, VFH. Vanguard Consumer Discretionary at 9%, VCR. Not to be confused with the old cassette player from the 80s. Okay, VIS, Vanguard Industrials. That's at 9%. Excuse me. Vanguard Consumer Staples, 8%. That's VDC. Vanguard Utilities, one of my favorites. I've owned this one a while in my big Roth IRA. It's the only one that I own from the sector-specific ETFs now in the Roth, and that's VPU. That's Vanguard Utilities. Really nice dividend payer. That's 8%. Vanguard Real Estate, VNQ. I do own that as well, so excuse me. I do own that as well in the Roth IRA, the big one. Vanguard Energy, VDE, 7%. Communication sector, VOX, at 6%. And finally, materials at 6%. So that's how I do it. And the reason why I do that is if I excluded one of the 11 sectors, chances are that I'm going to be invested in the 10 while the one goes up huge, because that's typically how it works when money is rotating from one sector to the other. The one sector that's being rotated from will suffer. The one that's being rotated into will become in favor, and it will appreciate in value. So I typically like to say invest a little bit in all of the sectors, and that gives you really nice broad-based exposure across all 11 sectors, if that's the way that you want to seek out your exposure and tailor your exposure limits to your liking, which is what I've done. Okay, a really good question. Thank you. Hi, new here. Name is Bill. I'm 30, without retirement. Just opened a Roth and M1 and invested $1,000. It's awesome. Market is all-time high. Invest now or wait. I've been buying stocks on sale with solid dividend. It's an interesting way of using M1 finance. Number one, those dividends will be paid. They'll fund the portfolio. The $100 will go into that portfolio and it'll fund the lowest section of the portfolios. That's kind of unique in nature. I think it's cool. I think M1 is just a pretty awesome product. Pretty awesome. But I think you're good. I don't know if I would get too crazy. If your dollar cost average schedule, which you don't put here, if you're doing $100 and you're satisfied with that, go ahead and just stay on course with that. I think that's good. Make sure that you're eating well. If you don't have a retirement, good on you for starting your own. What's the difference other than the fact that you're not paying fees to have that M1 finance account? So it is superior. Okay, it doesn't compare to a 401k, so you're not missing out on a whole lot. I typically would encourage folks that are participating in the 401k program to go ahead and stay the course and do so, but to add that additional layer as you've done there exclusively. Since it is your only account, I'd try to be as aggressive as you can, but as you notate, the market is at an all-time high, okay? So give yourself time, all right? Don't be in a rush, okay? Take confidence in the fact that you started an account with no fees, all right? You start an account that allows that tax protection. That is absolutely critical. Those two things right there give you the biggest potential to be wealthy. Are you going to be wealthy? I'm not a magic maker. Don't come on the Independent Investor channel and expect me to tell you otherwise. But are you aligning yourself up with the greatest potential to have financial security, to have more wealth than when you started with? You bet. You bet you are. You are. And you're giving yourself the same chance by taking that $1,000 and liberating those dollars over time, so the fees don't erode your money. People just don't understand how much more important that is than the investment, than the how you seek your exposure. This part right here, I mean, let's be real, guys. To get invested in the market, eventually you have to take that leap and enter into a product, okay? And they're all in a different form or fashion. You buy the VOO, it's 507 pieces of our Google, our Amazon, our Apple computers, Facebook, Twitter is in the S&P 500, right? So it's all your exposure to all these good companies that we know, okay? Make no mistake about it. Investing at its core is either buying stock exclusively or buying small pieces of stock to account for the diversification, if that's what we're after, okay? But I think you're really on the right track. Definitely stay with the channel, evolve with us, because being a self-directed investor is going to require you to exercise a little bit more tolerance, a little bit more ability to react to adversity. In the stock market, we call adversity volatility. Okay, so your reaction to volatility is not something to get emotional on and act upon. Okay, don't think for a second that you're going to come onto the Independent Investor channel and find me down 20% and being like, sell everything, you can sell over time the market, blah blah. You're going to hear it. Okay. And there's not even a dull roar right now with the stock market at an all-time high with regard to people thinking that the market is going to do anything other than go up. I'll be the voice of reason and tell you that is not going to happen. Okay? It's not. So don't expect it. Have fair expectations. Build your wealth. Okay? That $1,000, man, you'd be the first to get some encouragement from me and say, great job. You know? A lot of people don't have the courage to do what you've declared to me in an open forum that you've done, I'll be the first to congratulate you, but build upon it. Build your tolerance, build the wealth, build the DCA, build your cash, okay? Build. You see the common theme there? Approach it like a builder's mentality, okay? You've done so well in entering into an M1 finance account that a lot of people don't even know it exists. So leverage it and empower yourself, and the sky's the limit for you. Thank you so much for coming in and sharing. Really appreciate that. That's awesome. 250,000 would buy a mansion in some states. That's true. That's true. Not the one I'm in now, but I tell you what, 250,000 in Texas goes a long way. It really does. It's still the nicest house I've owned in my career. I continue to downsize. The next opportunity I may make rank transfer, and I'll end up buying a yurt some on my next opportunity. After that, we're going to move into a tent. And then after that, we're going to be Camp KOA, and then I'll retire. It'll be wonderful. So I'm just kidding. Anyway, let's scroll down and make sure I'm getting all these questions. Yeah, man. Where have you been? Exactly. I've been to some expensive states, and I've been to some not expensive. Michigan was pretty good, and Houston, Texas was pretty good. New York was a joke, and Virginia is really not. Geez, Virginia's tough too. Real estate here is really appreciated heavily, and I think most of the country is really enjoying some of that appreciation. So for you homeowners out there, good for you. I'm happy for you. It's awesome. I've been there, done that. It's good. Right, I basically had to start my program from the start, the beginning of June. I'm now using First Trade and M1. I had to cash in 17. It was a kick in the gut. You don't tell me what that's for. Man alive. I know you. You're a friend of mine. You're a friend of the channel. You're a subscriber. I love you. I'm going to use your example because you've been. It takes some courage actually to share that, Tim. It really freaking does. And I tell you what, man, people do go through those times in their life, where they've got to, liquidate, whether it's usually medical, to be honest with you. I'd like to go out on a limb and say that it's probably not a debt status, but it could be, there's no perfect life. There's just life. Okay. And it sounds like you drew a bad card there, and there's some lessons that can come out of that. And I don't want to use it as an opportunity to provide a lesson by nature of your misfortune. I've been there. I've done the very thing that you addressed there, the exact same thing. Had I had it to do over again, I don't think I would have looked at things a little bit different, in that money that you have invested, you can't touch. And I know that you're going to say, I had to touch it, and you did. No problem, no judgment. But there's a lesson. There's an inherent lesson, especially for my new investors. Brandon, if you're listening, man, and you've tuned in, you've stayed with me for an hour and 42, man, I'm still on here, okay? So you can sit and listen if I'm on here running this deal and I've talked for an hour and 42 straight. But when you approach investing, a lot of people get over levered and they don't even know that they are. Okay, your exposure to the stock market doesn't have to be all in. All right, and it just drives home the importance of having that. I don't even like to say rainy day fund. I don't to hell with that. I don't even know what that means, man. What you're looking to do is have a side pot of cash that you're comfortable with. Okay. If it's 6 months, so be it. If it's a certain dollar amount, to say, I want 10 grand in my account as my buffer, and then I'm going to take 10% and expose that. So I'm going to have $1,000 invested. I'm going to have $10,000 as my rainy day fund. All right. But investing is not one of those things that you want to do with the idea that you're going to invest X amount of dollars, then you're going to sell X amount of dollars to use the money for something else. If that's your idea about investing, and I'm not implying that this is yours, Tim, it sounds like to me that you drew a card and you had to make a decision, and you did. And I've done the same thing. But for you new investors, all right, It takes some courage to share something like that in the group. And there is a lesson to be had. And the lesson is this: if you're going to invest, don't ever, ever justify taking it. Ever. Ever. You're out on the street before you touch your retirement account. Okay? We live by that golden rule because I find way too often that people are justifying tapping into their retirement prematurely. Okay, they're looking to justify expenditures. And the first place that they look is that money that's been working so beautifully for them over time. And that seems to be a primary option to look at first. And you really need to remove that as an option to look at for that emergency stuff. So try to drive home the importance of having your investment fund, and then you've got your capital. And the greatest accumulation of wealth that I have right now is my cash buffer. It allows me to sleep easy at night. Thank you for sharing that. Obviously, you're young. We've got a real top here in the market. Hopefully, you're provided with a really good information to kind of buy the market at a little bit more opportune time. That's what I would hope for you, Tim, for sure. I'm waiting for that same opportunity myself. Whether or not it'll come next week, 2 weeks from now, 2 months, 2 years, hell, I don't know. Who knows? This is bananas. That's the chalk up I have for the stock market. It's irrational right now. It really is. Sentiment is really, really high right now. Really is. All right. To direct your questions to Ryan, type in the independent investor question. You bet. Yeah, you can do that. That helps me actually identify Joe. Thank you for that. I do have a direct email as well. Try to be understanding. I get a ton of freaking DMs, a ton, and I can't respond to them all. I freaking can't. I won't. I won't do that. I have to draw the line somewhere. If I was getting rich off of YouTube, I guess I could respond to DMs 24/7. But I do have a life when I'm not doing the independent investor channel, and I enjoy it. I do. And a lot of the questions, quite frankly, I've already answered through the course of the channel. So when I run across a question that is genuine in nature, I'll do my best to answer it. But if it is something that I've already kind of chronicled throughout the course of my offering content online, I typically let those go. I really do. Do you have a link to that channel? Not sure what you're talking about. If you're talking about my channel or some other channel, I'm not sure. Stock market record highs, stock market investing says. I think it's bonkers right now. Just be careful. That's my words of guidance. I've told you where I'm at specifically. If you were part of a stock market course or a stock market group, you could come in and get this exclusive information for the low cost of $19.95 a month. All right. I'm just kidding. I gave it to you for free. All right. That's just how cool of a guy I am. All right. All right. So play the Mega Millions or Powerball. That sounds like a hell of an investment opportunity. That's great. I've been seeing all these YouTube videos on moving Roth and traditional IRA funds into a limited liability company. Is this a smart idea or a good way to burn through legal fees and accountant's fees? I own an LLC. I keep it a completely separate entity from my investment. I don't cross-contaminate like that. And I kind of talked about Hella Huge 52. This is a really good question, by the way. I appreciate you offering it. I keep each of my properties, for lack of a better term, or platforms separate. I do that for ease and convenience. For example, I do have my YouTube channel as a feeder of my First Trade account. Okay, so that funding comes from YouTube earnings, and a lot of people on the channel they know that. If you don't, that's where it comes from. That's where that dollar cost averaging comes from. The M1 finance comes out of my pocket. I just take that 25 from my income and I fund it. That's my dollar cost average. But wow, I've never heard of that. Great. If they're hungry for YouTube topics, that's great. I think there's 100 other things we could talk about that is way more important on maybe growing your Roth IRA to 7 figures. I don't know. You're not going to hear from me any type of recommendation to liquidate your Roth IRA for any reason at all. I just told you you should be desolate on the street before you ever consider taking your investment retirement and using it for other purposes. But the Cornerstone Capital Solutions is the LLC that we own through the Independent Investor Channel, and it's a self-preserving entity. I pay tax exclusively to that, and I would never justify taking my Roth IRA and funding my business unless it was absolutely necessary to fund the business for equipment, etc., things that I need. We're not at that place right now, guys. I'm satisfied with the quality of content. We're going to be upgrading the technology and the audio and the lighting. Those are some things that are going to be some upgrades. You'll benefit from all that. I won't. I'll incur the cost for it. But it's sure as hell not going to come from my retirement account. But good question nonetheless. What's your opinion on growth investing versus dividend? I do both. I've made a ton of money on growth investing, and I just think ignoring the power of an Amazon, Google, Facebook, etc. made a ton of money. PayPal, I've made money with those stocks, lots and lots of money with those stocks. You just have to have a higher tolerance, man, because those can really, really swing. They can swing hundreds of dollars in any given day, and you just have to have a higher tolerance to risk. You can't invest in those names and be down $200 or $300 and then come to me and be like, Ryan, what the hell were you talking about? Growth investing is the worst thing ever. No, it's not. It gives you the highest potential for return, but it also gives you the highest prospect for volatility. You just have to have realistic expectations about what you want out of the style of investing that you choose. All right. You can be a passive dividend investor. You could be an active dividend investor where you're looking to manufacture cash, channel stocks, take opportunistic buying opportunities like I'm talking about. K97 was talking about buying 3M when it dips down to 150. I'm all about that. It's opportunistic buying. That's what we're looking to do. Pay attention to the stock market. It's amazing how many pockets of opportunity are out there if you're just willing to pay attention. You don't have to be an expert, just pay attention, okay? It says portfolio update discussion, por favor. At a minute 52, K97 hits me for a portfolio update. You got it. Be careful what you ask for, K9. We're loading up the portfolio machine here. Stand by. Stand by. I'll give you rapid fire. The portfolio is fairly condensed right now with the holdings. I'll do mine first. Apple Computer, Bank of America, Blackstone Group Inc. Now, we've already talked about that. Boeing, still 5 and some partial shares. Looking to increase my position in Boeing, by the way. China Mobile, Citigroup, Coca-Cola, Disney, excuse me, been on fire. Exxon Mobil. You'll notice a blue chip theme in these. FedEx had a great day today, by the way. Johnson & Johnson, 20 shares of Lazard Limited, Class A. Marathon Petroleum, Medtronic, Northrop Grumman, Royal Dutch Shell of the A-class shares, United Technology, and then the passive opportunities. VWO, which is Vanguard's Emerging Markets ETF. VNQ, which is Vanguard's Real Estate ETF. VBR, which is Vanguard Small Cap Value. Okay. And then finally VPU, which is Vanguard's Utilities. That's IRA number 1. Okay. IRA number 2, Holdings 3M. We've talked about it. AT&T, big holding. Started on an upswing and building it and built a nice base at 30. At 33 and change right now, approaching 34, doing quite well with AT&T. Chevron, 50 shares of Cisco, Corteva Inc. That spun off of Dow, which is the next holding, and then DuPont. Okay, so that was the tri-split again from that that breakup. General Electric, 293 shares of General Electric. Intel, 77 shares of Intel. JP Morgan, 40 shares. Kraft Heinz Food, 62 shares. Pepsi, 13 shares of Pepsi. Pfizer, Raytheon, State Street, token position in VTI, only 10 shares. I think I had a position of 50 shares. Swing trade the 40, took profit. Now I'm down to 10 shares. Those 10 shares have rendered an 8.86% rate of return. That's only after a couple of weeks. Investing's powerful. Verizon, Visa, probably one of my all-time absolute favorite stocks. Visa. Not kidding. Wabtec spun off of General Electric, I believe. I've just got one share of Wabtec. That's just in the portfolio. Not a sizable position. And finally, Wells Fargo. Okay. So those are the two Roth accounts. So just throw those at you rapid fire. Real money. This is not Monopoly. Real money. Accounting for about 107,000 in equity holdings within those two accounts. Yeah, 107,000. So, all right, that's the portfolio review, K9. I know you're all about those, and I don't mind providing them. Again, join the portfolio review course for $27.95 a month, and I'll provide you exclusive access to my portfolio. I'm just kidding. I provided it to you free of charge. All right. I'm the only YouTube guy that does it, I think. No, I think there's a few other that are kind of catching on. Maybe they're like, hey, man, do you see this independent guy, man? He's sharing all this, because I really don't think it's that big of a deal. Sorry. Any thoughts on the safety of AbbVie dividends? I don't. I've never been a holder of AbbVie. Be interesting to kind of to do a deeper dive on AbbVie. I never have. I've already chronicled my holdings in healthcare, Medtronic, J&J, Pfizer. So I don't really have an opinion on that. But let me cruise up here. I just jumped on me again. I know I've got some comments here at the bottom. What are your fixed equities? Let me jump back in the portfolio and give them to you. Just give me a sec. I could have been transparent with the brokerage account, but I wasn't. I just gave you the two Roth accounts. I'll give you the ticker symbols for the fixed equities here. If you guys are home gaming it, after an hour and 57 minutes, these are the real diehards in here getting the actual meat and potatoes of the Independent Investor live stream. VGIT, Vanguard's intermediate term. VCIT, Vanguard intermediate term. Okay, those are two separate ETFs. BLV, long term. VCLT, you can find most of these off of the fixed equities portion of the Vanguard's website. As I throw these out there, I would highly encourage you go into that and verify for yourself the particulars of each of these, okay? BSV, short term. VCSH, short term. And finally, BND, total bond market. Okay, so those are the 7. 1, 2, 3, 4, 5, 6, 7. All right, no problem. Thank you for the question. I really appreciate it. I'm gonna get to some of these questions. There's a few thumbnails here, folks that I don't recognize. I'd like to kind of give you guys. We'll go over time tonight. I don't really care because I'm all fired up. It's all good. JC, why is it speculation? Why can't it be investing? You guys are going back and forth with each other. Tesla, long Tesla, that's what you guys are talking about. That's why. Good evening, everyone. Welcome back, Ryan. Appreciate Dave just popping in. I see Average Joe Investing is here in the group, man. Just a great friend of the channel. I can't express enough, man. I really can't. Adriana hit me up and said, are you okay, Ryan? I think she was the only one that actually touched base and said, "Are you okay?" I thought that was pretty cool, actually. So I'm okay, and thank you for that. I really appreciate it. Just a long break from the channel. Worked pretty hard, so I took a overdue vacation. It was good. I needed it, so as everybody does. Is there a link to Vanguard's risk assessment? You guys are throwing some good stuff in here. The real journey begins 10 years in. That's when the serious compounding begins. That's a hell of a comment. I like that. That's the type of mindset that we're building up to acknowledge. Okay, that's real talk. That's real investing talk. Okay, if you're looking for short-term validation, anything within 10 years, you're barking up the wrong tree. Okay, you're not going to get it. One of two things are going to happen. Either you're going to become frustrated, you're going to sell out, you're going to question why the hell you're doing it. You're going to do everything to validate moving away from the stock market. I really couldn't agree with that statement more. I got Guts Berserk. That's a cool freaking stream name. I wish I could have thought about something like that when I was naming the Independent Investor channel. I would have named it Guts Berserk Investing. That's sick. So I've got Mike O here, and they go, what the next market catalyst in the short term? Earnings, the Fed, trade. Well, the next catalyst is going to be the Fed. If they cut interest rates, it's going to be a stimulus to the upside. I have a different view of that. I think cutting rates is not a sign of strength, in my opinion. I don't. I don't think the Fed should be doing anything. Just leave it the hell alone. Like, what are you trying to add more stimulus to the market for? Eventually, we're all going to pay for this. Okay, that's why I'm openly engaging in the prospect of not having all your eggs in the stock market right now. Okay, I'm at 48%. That's where I'm at. I'm obviously underexposed. I'm fine with that. All right, you guys take it however you wish. You guys can do whatever you'd like with your own money. I'm not your father. I'm just your YouTube buddy. All right, but that's what I'm doing. So I'm kind of scouring through. There's a ton of people who have made their way into this live stream, and I know I'm not going to get to all these questions. Holy moly. Curtis Brooks, your comment stands out to me a bit. I have 60 stocks, 40 bond portfolio. I'd like to move to 75, 25. What's the best way to accomplish that? I'd like to kind of understand, if you're talking about one share of each of those stocks, or if you've got sizable positions, like to kind of know maybe if it's in relation to an existing passive 401k base, 403b, 457 account, anything of that nature, because I can really respect what you're trying to do there, owning the entire stock market, but you're gonna have a hard time, because even the 60 to 75 stocks, you're starting to get into a realm where certainly you're moving toward diversification, but you're not truly diversified. What I mean by that is, by owning 75 stocks, and maybe you think that you're owning the cream of the crop, the stocks that are going to outperform the stocks that you just don't have time to get to and research all 500, especially for the large cap names. But then you introduce the entire stock market, and you're talking about thousands of stocks that you could just as easily owning portion of it in the ETF, because at the end of the day, what you're trying to get is that 8 to 10% rate of return, right? I don't know if all those stocks are dividend payers, but I'm quite certain that you've got a pretty robust portfolio. I think I probably have 30 in what I rattled off to you in the two portfolios there. But moving that, when you say it's portfolio, I need to understand if it's within a Roth account. If you're moving from brokerage to Roth, you can't do that. So need a little bit more information there. I'd be interested to kind of know if you're profit taking there, and some of the 60 allocating more exposure to single stock. Pretty risky time to be doing that, right? Just my thoughts on the move. I think it's a confident move, no doubt. You're definitely looking to build. I think your reduction in the bond, I think that may be good. We've had such a nice run up in bonds. You're obviously up, you know. So, but really good question. You know, it's a tough question for me to answer without asking you 10 more questions back as far as what we're actually looking for. Send it to me via email. I'll take a look at what you got, and kind of assess from there how heavily weighted you are to some of the blue chip names, or if there's some of the names that are a little bit more aggressive and you're looking to go for more growth in the portfolio. So it's a killer question. Thanks for offering it, the group. Really appreciate it. Mike Buffington, just like, let me take the risk acceptance test of Vanguard first. That's awesome. That's really cool. Mike, oh, I know you're right, great, but I haven't seen you guys are talking amongst yourselves. I like Joe's idea of hitting me up directly. There's so many questions in here. I'm having a hard time singling them out, the ones that are aimed at me. But that's all right. We've been going for 2 hours and 5 minutes, and not to upset the rest of the subscriber base. Most of the 65 folks that are in here right now, it's stayed pretty consistent throughout, but I want to be fair to the folks that do tune into this live stream that haven't got the live stream, obviously, over the last couple weeks. So I do want to keep it in control. I'll have to wait for next week to do my live stream again. This is really some of my most favorite 2 hours of the week, when I get to come on here and converse and talk stocks with you guys. I do thank you a ton for that. I'm just scouring through and making sure there's no final questions that kind of just jump out at me that I want to address. Yep, no, that was good. Guys, thank you a ton for making this a very successful live stream. It's really good to be back. Just kind of be patient with the topics and the 10, 15-minute videos uploaded to YouTube. To be honest with you, this is one of my most favorite things to do, is come on. Because I get to say what I mean casually. I don't have to come on and just script a rapid fire 10 to 15-minute video. I don't know. The verdict is out as far as how much value that provides. I think the value that we provide through the live stream is significantly more. That's just my assessment of it. I hope you guys feel the same. But at 2:06, guys, if you haven't hit the thumbs up button, do so. Support the channel. Certainly, you're always open to share the message. Certainly with your friends, family, anybody out there that you know. Fill them in on where I come from, what I do. What the kind of the root of the message is. Kind of help to give a little premise, so folks aren't walking into this, because I can talk fast. I do talk bluntly. Let them know not to be offended. Get to know me a little bit. I'd look to save anybody. I really want to focus on the few folks that came into the group tonight for the first time. It takes a lot of courage to come into a forum like that, but we really, really want to make this an open door policy for anybody that has interest in investing in stock market. And increasing your financial awareness and your financial IQ to the topic of financial investing, because I can tell you this, people need it. They really do. And I'm just a guy to provide that opportunity. I'm glad to do it. So thank you so much, guys. Stay tuned for more of the uploads to the Independent Investor channel. We will catch you guys next weekend. Have a great rest of the weekend. Thank you so much for tuning in. Guys, be well.